Hey everyone, Andrew Faldy here with SMB, and I'm going to show you a little bit about position sizing. I did a video recently about waiting for the market in general to be in play before taking trades, so using volatility filtering for trades, knowing that directional trades tend to work better when the market's in higher volatility, actual volatility, meaning the market's moving. So this is expanding on that idea, testing something else. And what you see on the chart is, let me move this off, you can see this is VXX, and I've added the VIX below it, because VXX, it's intended to closely be correlated to the VIX, however it has a negative drift and splits often, so we don't really get a relative basis, but the VIX is more stable. So we get kind of an idea about what the market's doing based on the VIX. So I'm using the VIX as more or less an indicator. And what I'm doing is I'm going to just take this simple VWAP trade on here. And I'm going to start with a baseline test. So it's just simply following VWAP up and down. And you can see over the history of it, it's got positive performance. Just for this test, for simple math, it's a $10,000 position showing, in theory, backtesting a $70,000 gain over the life of VXX. So I'm taking that and I'm expanding it with this little bit of script here and saying I have this VIX multiplier saying if the VIX is high, I want to use bigger position sizing. If the VIX is low, I want to reduce sizing. So I just say this is a filter. Do I use the VIX multiplier or not? If it equals 1, then I'm actually going to take 1/10 the value of the VIX, multiply it to my position size. Otherwise, if I don't have the filter on, it's just a simple $10,000 per trade. So that's what we're looking at here. So I'm going to show you first, we have the baseline version on. It says VIX multiplier is set to 0. I also have a VIX filter in general as well, so we can just only take trades above a certain level. The VIX multiplier seems to be working a little better. So VIX multiplier is set to 0, gives us the result I just shared with you. More important than returns is also drawdowns. Now this strategy draws down on a percentage basis by a large amount, so it could not be scaled up. You wouldn't want to use an entire account for this. This is excellent for hedging, especially if you're a mean reversion or market neutral trader, allocating a small portion of your account to something like this. It's okay for the large percentage drawdown on that small amount of capital because it wouldn't represent a large drawdown on the account. And when this is doing well, the large annualized percent returns are really just offsetting any challenges you might be having in neutral or mean reversion type trading. So that's the purpose behind this. I'm not advocating this as a great standalone strategy because the drawdowns are just a little too big for my taste on a standalone basis. So we're going to just look at this relative though, this max drawdown intraday, 5,400, 70,000 over the life of VXX. And now we're going to apply this multiplier, meaning all I'm doing is turning it on. It's locking up on me here. Here we go. So I'm just going to turn it on. This isn't the amount of the multiplier, it's just an on-off switch. So now I'm turning the multiplier on, and it's going to recycle through this. It's going to go back over the last more than 7 years and take all of those trades again. It's going to recalculate all of that size. So what may seem to be a delay in waiting for the chart to load, it's just really calculating an enormous amount of data for us. So we can see here that these numbers are the position sizes for every single trade going back. And let's take a look at what happens. So our $70,000 previous return turns into 170. That's good. So we like to see that increase in performance. The performance graph is very similar, and you can see during the quiet market periods, positions are smaller, drawdowns and returns are smaller, but during these higher volatility times, such as summer of 2011, super high performance, especially if a mean reversion, market neutral type trading, that's a period of time you're not going to have performance, you're not going to have returns likely, and you'll likely have drawdowns. So if you have this going on at the same time, that would be ideal. So, and more importantly than just returns, we got to look at the relative drawdowns. So the returns go up quite a bit, and the drawdowns go from 5,000 to 10,000. So our returns more than double, drawdowns less than double, and that's a good start. So very simple, just one little idea and a couple of characters for that first testing idea, and I'm going to continue testing that as well. So I want to show you one other thing real quick, and that is that we are doing these types of tests twice a month in what is called SMB Systems Testing Workshops. So let me bring this over here. You can see that systems testing workshops, and the way you get to that is there's a shortcut. You do smbu.com/testing. You hit that in, and that will redirect you to the page, and you can learn about our systems testing workshops. So right now you can, it's a $99 per month membership to come to those 2 workshops each month. But what we're doing is a $1 trial. So that allows you to start your membership to the systems testing workshops, come to 2 workshops for just $1, and that will automatically, just make sure you are aware, it automatically does enroll you for the rest, but you can cancel anytime before your first payment if you don't really think this information from the workshops is going to be useful for you. But I would invite you to try, if you're not sure this is for you, we have that trial there for a reason, because we want you to come, we want you to get some education about systems and learn different filters and strategies, automation, filters for your discretionary trading, etc. We talk about all of those different ideas twice a month. So check that out, smbu.com/systems, and come start your $1 trial. And I look forward to seeing you in the next workshop. Thanks a lot.
What are you doing this Friday at 1:30 p.m. Eastern? If you're a trader and you're winding down the week, maybe things are a little bit slower around that lunchtime period, join me and Andrew Faldy for trading conversations. We don't have a script. We literally just open up the floor and take questions from you guys, the SMB community, and answer it as best we can. It's kind of fun. We just loosen up and talk about trading and wrap up the week. So join us at 1:30 each Friday.